All, welcome back to Tech Tune Up with me, Paul Meeks. Today is July 23, 2024. And the last time I appeared, and remember, we're going to every other week schedule. When appeared on July 9th, I was in Benzinga's headquarters. They're, of course, our sponsor in Detroit, Michigan. And again, man, if you haven't been to Detroit in the last couple of years after this downtown renaissance, you gotta go. I'm originally from Michigan, and I hadn't been to Detroit for a while. And Benzinga and a couple of other firms have really taken it to a new level downtown. Visit Detroit, super cool. So I'm here with Benzinga, also with my own firm in which I run my tech equity model called Harvest Portfolio Management, just because I can. I live and work in Charleston, South Carolina. So we kick off the program, as we always do, with some important stock news, and at least my spin on that, because sometimes individual companies have tells that are much more broadly important. And so let's get to that right now. First of all, I think it's interesting that Microsoft and its 49% controlled AI stalwart, OpenAI, have come to an agreement where Microsoft is no longer going to be an observer on OpenAI's board of directors. There was a big controversy with corporate governance not too long ago. Microsoft steps in, probably to protect its castle, but they must tell you by stepping off from this observer role on the board that they're now comfortable with founder and CEO Sam Altman running the place and the technology direction of said firm. Next, everybody knows this story about CrowdStrike, but this happened in between my two meetings with you. This is interesting because as of a week and a half ago, CrowdStrike was the most popular, most successful, most respected cybersecurity software company. It was in the Meeks tech portfolio. And even after I dumped it on this software breach, which I'll get to in a minute, still sold it with a nice profit. But this is interesting as to what happened. There was never any external cybersecurity threat. CrowdStrike on Microsoft's operating system was installing what I must believe they thought was a pretty simple content update, and it attacked the kernel or the inner workings of 8.5 million Microsoft devices. And here is why I blew the stock out. Sometimes when I admire a company, and I do admire CrowdStrike, or at least I did admire CrowdStrike, when it has a issue like this and the stock collapses, sometimes I think it's a temporary issue and I'm a better buyer. And so I was thinking about that. The first day that we traded this information, the stock was down 11%. That was Friday of last week. And then Saturday and Sunday, I took a deep dive and I decided that the stock is going to go down much further. And I had to blow out my shares at the open Monday morning. Because here's the issue. What happens if a ton, and there are a ton, of CrowdStrike and Microsoft customers come back and sue CrowdStrike for downtime? Like one of the biggest industries that was impacted during this breach were the airlines. What happens if Delta, United, Southwest, actually Southwest wasn't on that system, but American Airlines come back and say, well, we missed all these flights. We had to cancel all these flights and here's the revenue, you pay us. That could happen. It could be in the billions. And also this potential financial or legal liability may not be short term. This could be open-ended. So I initially was inclined to buy more shares of a company that I've done very well with, that I admire. But you can't fall in love with a stock, fall in love with your spouse, but never a stock. And so I blew out CrowdStrike. So next on Apple, one of the things, as you know, that's always stuck in my craw is that we have these Byzantine internet regulations in America based on the 1996 Communications Decency Act. And with that leadership in Congress vacuum in this industry, we unfortunately have defaulted to all of the regulations coming from the European Union. And the European Union has big tech in its crosshairs, and they have come after Apple, and they actually settled for antitrust behavior, at least the accusation of, by Apple with its Apple Pay. And now they're coming after their favorite guy they love to beat up, Elon Musk and X, which formerly was Twitter. So stay tuned. You don't have to worry about if Kamala Harris or Donald Trump is in the office as far as who is going to beat up on tech next after we name a president on November 5th. It'll already come, if you like it or not, from the European Union. Unfortunately, another pretty big breach, even though it was reported after the fact. This was a couple of years back, but anyway, a real black eye for AT&T. Essentially a breach of the data of tons, and they do have tons of wireless customers. So here's the issue. We desperately need cybersecurity software. We desperately need cybersecurity services. But what happens if we choose CrowdStrike and they blow us up with a simple content software update? Next is Tesla. Tesla reports tonight. Here's what I think happens. Elon loves to distract you away from the sagging electric vehicle business. So I think they're going to report inline results, maybe some pressure, but you're going to come away from tonight's conference call with no excitement about not just Tesla's position in EVs, but in the EV market in general. Okay, so if we take that driver off the table for Tesla, now they're going to talk about robo-taxi. But wait, they were supposed to have this big robo-taxi reveal meeting on August 8th, and it can't be going well because they pushed it off until October. Okay, so now we don't have the robo-taxi announcement as our crutch. And so what happens today is, and Musk has already kind of pre-announced this, he's going to talk about humanoid robots. Humanoid robots that actually do the manufacturing of Tesla. And also, once they groove it in their own manufacturing facilities, they sell the technology. Okay, maybe not. Remember this robo-taxi that was supposed to be the next big thing. Musk originally talked about that in 2018 and 2019. Here we are in 2024, and we got nada. Actually, autonomous vehicles will probably be the domain of the Chinese in the end. And if you have to pick one company that's going to succeed in this space with autonomous vehicles in the future, probably not Tesla. It's probably Waymo, which is a part of Alphabet. So stay tuned. I'll report next time on all wacky and wild things with your buddy, Elon Musk. So next we do have Alphabet. Alphabet's also reporting tonight. I don't expect as much fireworks here. I expect that business will be pretty strong because until further notice, they are driven by digital advertising revenues, pretty robust, particularly as we advertise the hell out of who you want to be the next president of the United States. But this is more interesting. There have been on again and now off again discussions with Alphabet to acquire a company called Wiz, W-I-Z. Wiz is a cybersecurity company, and they were going to pay as much as $23 billion for a privately held company, because what they want to do and what you can expect the industry to go to over time is to bring cybersecurity into their Google Cloud offering. Because if they do that, they might be able to take more market share from Microsoft Azure and Amazon Web Services. Now it looks like Wiz is now going to go public, and they're going to try their hand at a IPO. Obviously, if they thought they're only going to get $23 billion, they'd probably stay with Alphabet. We'll see what happens, but the key is the trend of bringing cybersecurity into these outsourced cloud data centers. The other thing I think is interesting about Alphabet, and it was announced today, but it hasn't gotten a lot of press. I think it should get much more press because it's big, is that Alphabet, after many years of hemming and hawing about it, is actually going to stick with cookies. Cookies are those software codes that track you around the internet. Digital advertisers love them because they can more easily give you specific ads. So this was actually potentially, if cookies went away, to disrupt the digital advertising model for both Meta and Alphabet. And now if we go back to the same old, nobody is going to be able to take a drop of share from Meta or Alphabet. Their power, their concentration of the world's digital advertising business will continue. But you do need to know that after those two companies, number 3 is Amazon, because Amazon now has a huge business of selling ads around your searches for e-commerce items on their site. Next, I was really impressed with the announcement this morning for the quarter from Spotify. Spotify reported before the bell. Stock is up right now about 12 or 13%. This is why I don't own Spotify yet, but I'm now taking a very close look at it, because up to now, the history of this company was what I like to call profitless prosperity. They brought in users, they brought in eyeballs, they were looking at all these cool internet metrics. But now they have pushed that aside or de-emphasized it. And now we're in a situation where they're now taking steps to improve their profitability. If they improve their profitability, then I go from a skeptic to a potential buyer. So I'm doing the work on that now. But what they reported this morning was very pleasant news, particularly the new focus on profitability. SMCI is kind of interesting. I'm desperate to buy more of SMCI, but it has weakened recently. And when you see a stock weaken right before they announce their quarterly results, maybe the market is telling you something. So I will tell you right now, SMCI did have some good news recently. It was selected to be in the NASDAQ 100. And there it took place of the very old school, very shitty drugstore company, Walgreens. So we'll see what happens with SMCI, but I'm more inclined to buy it. But I'm waiting for some technical support. I'm waiting for fundamental confirmation when they announce their results, which will probably be just a couple weeks, 2 to 3 weeks. But I might come back to you strongly with a request to buy more SMCI. In the meantime, do what I'm doing. Just hold what you got. Taiwan Semiconductor was interesting, and it kind of has me spooked about this whole quarterly earnings season. They had a very good result. They had strong guidance, and yet their stock fell. Why did their stock fall? It wasn't really anything to do with fundamentals. About the same time they announced their results, the Biden administration, of course this goes back a couple weeks, said that they may tighten the restrictions even more on foreign companies that use technology in their products and then sell those products to China. You guys, that's geopolitics. I can't do anything about geopolitics. I can't cover geopolitics. I'm no expert in geopolitics. But I will tell you, if on that news or any other such news, the shares of TSM go down, buy them. Always a good opportunity to buy this on a dip. Same thing goes with the next stock on their list. This is ASM Lithography. This is a company that's based in the Netherlands. It's Dutch. They dominate and really are a monopolist in a very important piece of equipment in semiconductor capital equipment called EUV, which stands for extreme ultraviolet. They had a pretty good quarter. This is a transition year for them. Nobody was expecting much. They didn't get much. But the order book was up nicely year to year. And half of their orders these days are what they have the monopolist position in, EUV. But that stock got whacked also based on geopolitical stuff, right? You have ASML, people are worried about the restrictions on US technology. You have TSM where the same thing goes, plus the fact that the Chinese are always ready to invade Taiwan, and that can't be good. And Trump says to the Taiwanese that if he's president, and let's face it, he's probably going to be president, that he's going to force the Taiwanese to pay for us to defend them. So when you have these candidates, whether it's Harris or Trump, talking about these things, geopolitics, it has given you an opportunity to buy Taiwan Semiconductor. It has given you an opportunity to buy the Dutch ASM Lithography, both kingpins, best in the world in what they do within the semiconductor food chain. So that's TSM, that's ASML. Netflix didn't respond very well to its quarter, but I thought Netflix quarter was great. And you guys know that my philosophy is you want to be in video streaming, and you should be with your portfolio. Just buy Netflix, buy it on any dip, and short the shares of Comcast, Disney, Warner Brothers Discovery, Paramount, these legacy companies that are desperate to become Netflix. Now, Netflix is obviously going to be more expensive, but it deserves the premium, and you don't have this legacy bullshit to video streaming transition risk. So, Netflix, also buy it on a dip, and you got one. Amazon last week had its Prime Days. And in those 2 days, I think it was July 16, 17, they sold over $14 billion worth of stuff, which was up 11% year to year. So that's actually a very good sign. Of course, we don't buy Amazon, even though we do have it in our portfolio, based on anything really that they do in e-commerce, whether domestic or international. We buy it based on the momentum in AI and based on the momentum with Amazon Web Services or data center outsourcing, which obviously plays into this nuclear arms race of infrastructure building in AI. Still like Amazon a lot, but a pretty successful Prime Days. 2 days, $14 billion worth of sales, up 11% from last year. I'm starting to get a little bit worried about Synopsys, the next on the list. Synopsys is still on the Meeks buy list. It is one of the only 2 companies in the world that dominate the software to design semiconductors. It's called EDA software, electronic design automation. The other big player here is Cadence, CDNS. Now, Synopsys has not reported its results yet, but Cadence just reported its results. And Cadence got hit a little bit, not because this past quarter was poor, it was fine, but their guidance was a little bit more subdued versus what the street was expecting. So we got duopolis, and we have one at least giving us a little bit of a queasy feeling. So I'd imagine Synopsys will do the same. So anyway, still on my list. You'll see in the next segment, it's colored yellow, which means wait and see. But I am a little bit spooked about what its competitor said just yesterday. T-Mobile has been on the Meeks buy list for some time. It looks like the feds, driven by 6 Democratic senators, may give T-Mobile some headache over its planned acquisition of cellular wireless. Obviously, they're talking about antitrust concerns. This could be legit. This could be a problem. This could upset the apple cart with some mergers and acquisitions for T-Mobile. So the same thing goes. Let's kind of wait and see what happens with all this political rhetoric and hold off on buying any more T-Mobile shares. NVIDIA, NVIDIA got whacked a couple weeks ago. NVIDIA is still on my list. 40% of the Meeks portfolio is in a combination of NVIDIA and Micron, and I'm happy to do it. The problem is NVIDIA is not going to announce its results until August 28. And Micron is not going to announce its results until potentially as late as mid-September. So we're not going to get any direct data from those companies. But NVIDIA did get a piece of good news that caused a little bit of a rebound in the stock the last couple of sessions, that it is creating technology with its latest iteration of Blackwell GPUs. These are the chips that power AI. And they're going to have an iteration that actually is going to be able to pass the export restrictions to China. So if they can come up with some version of Blackwell, which will really drive them next year, and they can actually sell it to the Chinese and drive revenues and not be totally blocked from that market, which is a big market, that obviously bodes very well for NVIDIA and gives me even more confidence that not only will they deliver the results that Wall Street expects, but probably beats them. Next here is, I'm always looking for AI tells. And there is a private AI company, not publicly traded, called Cohere. And Cohere, even though it's not that big of a player as of yet, its latest funding round as a privately held company valued Cohere, which is really small, at $5.5 billion. That is a lot. So I will tell you, it still looks like the venture capitalists have a real appetite for building out their AI portfolios. And you know that my view for weeks and weeks, if not months and months, every time I've appeared on Benzinga is, yes, I believe in continued AI infrastructure build, which favors NVIDIA and a couple of core semiconductor companies, also like Micron, ticker symbol MU, and also the server companies, the servers that go in those AI data centers. So I do have Dell, I do have Hewlett Packard Enterprises, and I do have, and I'm most confident in Supermicro, SMCI. But as I told you, the chart looks really crummy for that stock, so I'm just kind of keeping that one in the holding pattern, probably at least until they announce their quarter results in a couple weeks. The last thing I'll say before I move on is there are a group of semiconductor companies, and they produce what we call analog chips. Analog chips are used to track real world signals, like the thermometer in your bedroom has an analog chip. So it can track the difference between 73 and 74 degrees. Digital chips, which get far more press, they are binary. You're switching a digital circuit either on or off. Now, microcontrollers, which are probably the biggest category of these analog chips, typically find themselves in automobiles. And there is a company that reported today, NXPI. It's actually a foreign semiconductor company, ticker symbol also NXPI, had a pretty bad quarter. And so in sympathy, all of the US analog companies are down. NXPI, Analog Devices, ADI, Texas Instruments, TXN, and Microchip, MCHP. So this tells us that analog chips, you want to be out of them. I don't have a single one in the portfolio, and sometimes I really like them depending on the business cycle. But NXPI is telling us that essentially selling chips that go in the dash of your car, at least right now, is not a good business. They're missing Wall Street estimates left and right. So please focus not just on digital chips, but the AI infrastructure builder plays, and not the analog chips that I just highlighted. Next, let's go to, as always, a lot of action in my tech picks. Here we go. I don't go through all this stuff in great detail, but red means sell. And on my list, loved this stock 2 weeks ago, but I went through the whole cybersecurity breach with CrowdStrike. Wasn't really a cybersecurity breach at all. CrowdStrike effed up and downloaded bad content update to Microsoft systems. So you guys, I'm sorry, even if you hold it today, blow it out. I don't know how big the fines are going to be, for customers' downtime, but it's going to be massive, and it might, as I said before, be open-ended. All these other stocks are still on my fresh money buy list in green. Micron, my favorite pick. T-Mobile, I told you what's going on. Maybe that actually should be yellow based on this regulatory pressure they seem to be under with the cellular wireless acquisition. Microsoft, Meta, Amazon, Synopsys, maybe also hold off a bit based on the poor guidance given just yesterday from Cadence Design Systems, its competitor. But yeah, I still like NVIDIA. When NVIDIA announces on August 28th, I expect more of the same. Broadcom, Dell, Taiwan Semi, I told you that based on this crack in the stock, based totally on geopolitical comments from Trump saying we're going to make the Taiwanese pay us to defend them from the Chinese. It's got everybody rattled over there, and it hit unfairly Taiwan Semiconductor. Same thing with the Dutch ASM lithography. Biden had spoken a couple of weeks ago about tightening the screws even further on ASML and other foreign companies that use U.S. technology embedded in their systems and then sell them to the Chinese. The ones that are in yellow, I want to wait and see, because this quarter, I usually, after all my years of doing this, have a pretty strong conviction when we go into a quarter what a company is going to report for its financial results and what management is going to say for its guidance. And because I typically know those two things, I typically know how the street is going to react to that quarter. Will the stock go up or down? And sometimes I trade ahead of quarters based on my knowledge. But we are in an environment right now where I have low confidence that even if I'm 100% right on the fundamentals, I don't know how the stock is going to react. Like I was 100% right on the fundamentals of ASM and TSM. And based on these geopolitical comments that nobody could possibly see coming, particularly not a equity analyst like me, the stock's actually dropped. Netflix had a great quarter. Stock dropped. So anyway, right now, if you have a company that is about ready to announce their quarterly earnings within a couple of days, just hold off. Don't go ahead of the quarters, because even if you're right about the fundamentals, in this particular environment, July 2024, with all the cross currents, domestic and foreign, it just isn't worth it. So that's why all these stocks here in yellow, I still have high confidence in them, but I don't know how they're going to react. And they are all going to announce their results within days, some of them within hours. So if you're about ready to get a confirmation of your thesis, even if you miss a little pop in the stock because the news was great, I'd still wait. So you have on this list Google, Arista Networks, Qualcomm, SMCI, I've already mentioned, Coterra, AppLovin, First Solar. They're all going to be reporting within the next couple of weeks. So please just hold on. Don't be tempted to go ahead of them, because I've never been in an environment, or at least not for a long time, where I have such little confidence in not the fundamentals. I think I got that buttoned down, but in how stocks are going to react. There's just too much shit going on. So anyway, those are the tech picks. And let's finish up, as I always do, with tech trends. Back to rates. When I say rates, I'm talking about interest rates. Interest rates go down in these United States, stock prices, particularly those of tech and other aggressive growth stocks, go up. So we had a couple of good signs last week. Last week, the consumer price index was announced, and it was benign. Last week, the chairman of the Federal Reserve Board, our central bank, which controls monetary policy, his name is Jay Powell. He testified one day in front of the House, the next day in front of the Senate, and he actually said something quite interesting. He said, although our long-term goal is to get inflation down to only 2% increase, which is kind of a normalized rate over time, we don't have to wait until we see 2.0% on one of these gauges. If we continue to see inflation dropping closer and closer, then they will lower rates. Because if they were not going to lower rates until we hit the 2.0% hurdle, that would be some time. So to put this in perspective, the Fed likes to use not the CPI, which is very popular. They like to use as their inflation gauge something called the core PCE. PCE stands for personal consumption expenditures. Core means it strips out the very volatile food and energy. So last month, core PCE was 2.6%, down from 3 readings in a row of 2.8% in the prior 3 months. Now, a couple of years ago, when inflation was at its peak, this figure was over 5%. So it has come down significantly. So we're looking at 2.6% right now. And that's what the Fed is looking at. They don't need to see 2.0. But if we can go from 2.6 to 2.5 to 2.4, I think we're going to lower rates. We will not lower rates in this country at the next meeting of the Fed, which is July 31, just in a couple of days. However, traders are telling you, if you look at the CME FedWatch tool, which is the best tool there is to gauge these things, that there is a 94% chance, 94%, that when the Fed meets again on September 18th, they will lower their benchmark interest rate by 0.25%. Once we get there, they will probably start a streak of lowering rates. And that could go through all out 25, probably even into 26. And that should be very good for stocks, right? Rates go down, stock prices go up. So I keep watching rates, but I'm comfortable that the first cut comes on September 18th. So I also wanted to talk about, and I've already mentioned this, that I have little confidence right now as to how stocks are going to trade based on their results. Right? There's too many people that are saying, even if a AI company announces a monster quarter, that say, oh, that's great, but the AI bubble is about ready to pop, just like the internet bubble popped in the early 2000s. I don't think that's going to be the case, at least not yet. But that's why I beg you to avoid the temptation of buying stocks ahead of their quarterly releases, particularly if you only have to wait a couple of days, because you could be spot on bullish fundamentals. The company could upside surprise revenue and earnings per share and even give good guidance for the next quarter. But the stock could still fall. Take a look in the last week, Netflix, ASM Lithography, and Taiwan Semiconductor. So take a look. These are the stocks that are on the Meeks list that are going to be reporting very soon. These are those yellow stocks. These are the ones that we are going to get a data point pronto. So let's take a look at that list. So today, July 23, we got Tesla and we got Alphabet. I don't give a shit about Tesla. I think they're going to try to disguise a poor EV business by getting you thinking about robo-taxi and humanoid robots. Neither one that are imminent, and particularly the robo-taxi. Remember, with a lot of fanfare, they scheduled a big reveal event for August 8th. Now they're saying it ain't happening until October. Well, if they're pushing back their own event, what's that tell you? So anyway, today we have Tesla and Alphabet. Tomorrow, or not tomorrow, next Monday, Microsoft, followed by the next day, First Solar and Arista Networks. Wednesday, July 31, we have Meta, and then a very big day to start the next month. Thursday, August 1st, Amazon, Apple, Booking.com, and my favorite nat gas play to power up these AI data centers, Coterra. And you guys, unfortunately, we don't get the two top Meeks picks, NVIDIA and Micron, until NVIDIA on Wednesday, August 28th, and Micron not even until the first or second week of September. So anyway, guys, if you see one of your favorites here and they're about ready to report earnings, I'd probably wait until you get the data before you do anything foolish. So back to the tech trends. U.S. Supreme Court. It doesn't really matter what happens on November 5th. This is done. You may recall, because I've announced this before, that the U.S. Supreme Court has overturned what many people call the Chevron deference doctrine. What this had essentially set up before it was overturned is it gave federal agencies like the EPA, even like the Federal Trade Commission, wide latitude on essentially defining, interpreting regulations, and then enforcing them. Now that is going to be tightened up, and you're going to have tough hurdles to be able to have such strength by these federal agencies to go and disrupt the businesses. So this actually, if you believe in capitalism, if you believe in fair play, if you believe in light regulation, the U.S. Supreme Court obviously agrees with you. And when your buddy Donald Trump becomes president, he believes in that too. So that's interesting. Maybe it breathes a little life into some tech names that essentially are being scrutinized, but maybe now not scrutinized as much for federal agency action against them. So the next thing is EVs, right? I told you the EV business is sagging. I think we're going to see indications of that tonight with Tesla's quarterly earnings. But how about this news? Ford and General Motors have announced their results, and both of those companies are essentially retrenching, bailing out of EV development to go back to legacy cars. The market is just not there for them. And I don't think it's not just them. It'll be other legacy companies that are pining for the days where they could sell their gas-guzzling F-150s. Like, for example, Ford had earmarked $3 billion to develop EVs. It is redeploying that $3 billion back in its most popular internal combustion engine trucks. Interesting. Anthropic. Anthropic is one of the key competitors in large language model building to OpenAI. They have partnered with a venture capital firm in Silicon Valley called Menlo Ventures, and they have a $100 million fund. It's probably going to be bigger over time, where they are funding companies that will be using Anthropic's large language model. So this could be a real threat if this blossoms to OpenAI. I mentioned before EVs, in addition to this real interesting information about the retrenchment in EVs by General Motors and Ford. I think you need to know that based on the data we're seeing, if and when we get to autonomous vehicles, you know who's going to be leading the charge? It ain't going to be Tesla, no matter what Elon Musk says. It's probably going to be the Chinese. They are way ahead. And they're even further ahead of probably the best candidate for autonomous vehicles in the United States, which is Alphabet's Waymo. So unfortunately, one of the greatest drivers in this industry may go to the Chinese. We'll see. The other thing I've been doing recently with you on this broadcast is framing the AI conversation. Remember, I used to manage one of the biggest tech funds in the world when the internet bubble was inflating and then popped. I have lessons learned, and I'm much better now in realizing the winners and losers, have a much more patience in my analysis. So what I'm looking for, remember last time, I'm talking about after we build the AI infrastructure, which right now is the domain of the data server companies and the chip makers. Once we come out of this AI product development with AI apps and products on the other side, you have to think about, are these going to be revenue generators, or are they just going to be used by the company to make themselves more efficient and maybe save some costs? The holy grail, the successful at the end of the day AI companies will be those that sell their AI shit to others. So it is a revenue driver, not just a small one, a meaningful one, and also a productivity enhancer, a cost saver with our operations. If you can do that 1-2 punch, you could do very well. But unfortunately, I think very few will realize that dream. And remember last time I talked about the other way to frame this conversation. If AI is just a feature of one of your products, I don't care. Features become commoditized. If AI is a standalone, successful product or product suite, then you may have something. And as I've told you before, the biggest test for the success or not of features is this Christmas. Apple will force you, if you want to have AI as a feature on your phone, to buy their most expensive iPhone 16 or iPhone 15 Pro or 15 Max Pro. They are betting the ranch that you will be so intrigued that you will dump, even if it's relatively new, your iPhone to grab these. That is a feature. That is not a product. Apple is not going to be charging separately for this stuff. Some people on Wall Street think that this is going to lead to the super cycle or the mother of all iPhone upgrade cycles. It may happen. I think there's just as much of a chance that it doesn't happen, because AI is a feature. I don't think it's that important. AI is a product or product suite that is independently driven by its own business model. There you have it. But I don't think Apple, at least the way Apple's describing their iPhone entree, they're not talking about charging for it separately. So we'll see. This is interesting. Remember, I just talked about maybe a little bit easing up of government regulations for these companies, at least the United States, and you'll see more of that if your buddy Trump becomes president. Probably does. SolarWinds is a company that you may recall was in the midst of a cybersecurity breach back in 2020 that knocked out a bunch of its customers. This was the CrowdStrike of 2020. And it was very interesting because the SEC, Securities and Exchange Commission, sued the company for not only the breach, but for hiding it from customers, and even sued the top technology exec at SolarWinds. So this could have been precedent setting, right? Going after even the engineers. But what happens is, all these years later, now it's 2024, SolarWinds chief technology officer was acquitted, saved. And so it goes to show that maybe there's going to be a lighter touch with the punishment for cybersecurity breaches than you originally think, because that was a pretty scary precedent when the SEC sued back in 2020. And now it looks like they've reversed themselves somewhat, or the courts have forced the SEC to reverse itself. A lot of people ask me about now that they think, and I think, that Trump winning the election on November 5th is a foregone conclusion. What's this going to mean to tech? Here's what I think. I think Trump has a bug up his ass with social media. He very much hates Mark Zuckerberg, and he thinks Meta, the old Facebook, is propaganda for the left and actually restricts conservative content. May or may not be true. I have no comment on that. And then remember this push out of the United States of the Chinese TikTok. That ball started rolling under Trump's first administration. So what I expect when he wins is that he will be tough on social media, and the headlining bad guys will be Meta and TikTok. However, the fact that he selected J.D. Vance as his running mate tells me something. J.D. Vance was a venture capitalist, not a very successful one, but he was a venture capitalist. And he was by far and away the favorite VP candidate of the folks in Silicon Valley in the tech sector. So obviously those influencers had a lot of influence. He rose to the top of the class, and now he's on the ticket. So he is a tech acolyte. And he is also, obviously, he's on the ticket because he believes in light regulation, which Trump promises for his second administration. So I actually think, versus what some of the stuff I'm reading, where they think it's going to be all bad for tech once Trump takes office, I don't think so. I think it's going to be bad for social media. But I think for other companies, they could see some regulatory relief, and that would be really good. So my last thing I want to talk about today, and this is kind of a tongue-in-cheek, but maybe it's still a scary harbinger of what is to come. I don't know if you've read about this, but we have already had a AI, artificial intelligence beauty pageant, and they crowned a winner. I don't know if it was like a human or if it was like a video or some kind of depiction. But anyway, they had an AI beauty pageant and they actually crowned somebody. So I don't know, man, when you start seeing stuff like that, does that mean this AI bubble is about ready to pop? There were weird things like that, funny or not, when the internet bubble popped in 2000. So anyway, be wary of AI beauty pageants. You guys, I'm going to come back to you in 2 weeks. It's going to be a great show then. Make sure you tune in. Make sure you subscribe. Make sure you like me, because in 2 weeks when I come back, almost all the Magnificent Seven will have announced their earnings, and I will tell you exactly what to do with those stocks and more. We'll see you in a couple weeks.